Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market had a slight downtick in volatility last week as participants digested the prospects of a world mostly in lockdown. Prices remained weak and slid here on Friday, and that's despite bounces that we had of some significance during the week. That started right off at the bat on Monday, where the markets moved up big. There was news that Abbott had a test for coronavirus that would take 5 to 13 minutes, and that was going to become available soon in quite large numbers. And Johnson & Johnson said that they may have a COVID-19 vaccine in the next year. The markets took that as good news, as they will, and bounced pretty significantly. Tuesday, the markets tried to move up as news came out. Pelosi and Trump both coming out with their own phase 4 bailouts, each around $2 trillion. And that rally just kind of hit resistance on the upside, levels that we discussed in last week's show, and then the market headed down again. Wednesday, the markets fell big overnight as the COVID-19 news got much worse. The Eurozone and Asia all taking big hits, and Florida on that day finally came out and said that they were shutting down. There is now, I believe, 40-something states that are in shutdown, and they are talking about this expectation of COVID-19 getting much worse. Thursday, Trump tweeted that he had brokered a deal with Russia and Saudi Arabia to end the price war in oil. That gave the markets a lift. There was no real details on that. There still is not, though it appears that there's going to be another meeting coming up soon. I'll speak about that in a moment. We saw oil surge instantly about 35%. It was a massive movement as the equities in the energy sector continued to move on the upside. Just a huge rebound. The oil settled in with over a 24% gain on the day actually, and that's biggest ever. Thursday morning, the initial claims for unemployment came out, 6.6 million. The week before that was like a 5 times the record of the old record at 3.2. So we have about 10 million initial claims for unemployment that came in the last 2 weeks. S&P 500 on that news fell 35 quick points, but then recovered. Friday, the payroll number came out, and the payrolls were down 701,000. The U3 rate jumped from 3.5% to 4.4%, and that is not reflective of what is really going on. Those numbers are going to be much, much higher. The numbers we're going to see for unemployment are going to be much worse than 2008 and 9. Stocks initially kind of just shrugged at it, didn't make a big difference, but then eased back here into the midday period, with the S&P 500 losing a lot of ground, falling as much as 50 points, and it sits right near that as we get into the second half of the day here on Friday. The news that really is bothering it today is out of New York, as the cases of COVID-19 just surge, and now they're talking about 100,000 cases there, and it potentially getting much, much worse. So that is weighing on the stock market here on Friday. The recession that few predicted is here, beyond even the worst predictions of the doom and gloomers out there, the people that forecast constantly how bad things are going to be. Well, it's worse. I'm actually blown away by the number of analysts and business leaders and people out there saying that they expect when the virus does get under control, we'll be back to normal. Everybody will be back working. People will be back flying and doing things and that they did before, and that is incredibly naive. Yes, and hopefully 1 to 2 months, virus transmissions in the U.S. will come down sharply. All this social distancing and lockdowns and the horrible visions we see on TV of people suffering and families devastated by these horrible losses. My heart goes out to them. All of that will work. That will work because people will listen and will be able to get enough ventilators and things will be better. And the news will be coming out that there are fewer transmissions and hopefully not the 200 or 250,000 dead that they are saying out there, which I believe. Of course, anything could happen, but they want to paint the picture as bad as possible, so people will react. People will keep themselves out of trouble. And when this good news comes out, well, any good news, as we see, investors are going to send the markets upward. Then they're going to run smack into the realities of this new world we live in. After 2 decades of the government and the Fed creating the illusion of a better economy, and the zero interest rate policies and QEs and everything that they have done here, that has actually created the devastation we're in now. Yes, COVID was the trigger, but they set us up for this, and we've been living on a drug of ever-growing debt. It's been an illusion right now that we've lived in. And now essentially they have to take that drug and they have to just push crack into every orifice of this dying economy that we're in. A good picture of that is the one of their new international repo facilities that they put together that essentially is meant to calm the foreign short-term debt markets, repo markets. The U.S. wants to liquefy everything. They are taking in charge of liquefying the whole world, no matter how much it costs everybody. The world that we knew, well, it's gone. And it's going to be a long, painful road as we move ahead and get through this time period. Much of what they're doing, much of what they save, is a temporary fix, and what we're in is a readjustment. This is, for the markets, a valuation reset. The S&P 500, you might have thought, when it was trading up at its highs near 3,400, that was a little bit overpriced. But I think now, having lost a third of its value, they may be fairly valued right now. And what we're looking at is a much different world going forward. This period that we're in now, a period of adjustment and a valuation reset. The question for you, will you get hooked? Investors will be looking over the valley in here, and we will see markets that will move up again. What's important to you? That's the question. Are you in the hope of getting your money back? Your 401k has lost a third of its value, somewhere around there, or a little less or a little more. Markets are going to move up, and you're going to feel optimistic, and everything is going to be fine. Is that where you're going to be? Or are you going to ratchet down your risk? Are you going to use these rallies to get set up for the long period ahead where things are very, very different? Those are your choices. Hope for getting money back, or ratchet down your risk when you're given the opportunity. I say to you, choose wisely. For the stock market this week, it's a pretty wide range of declines, like 2 to 8% on the downside. NASDAQ a little bit stronger, the RUT much, much weaker, as the Russell is filled with stocks that are just buried in debt. And many of them, which were in existential risk 10 years ago, facing that problem right now. Bond market, very resilient. 30 years up 1.5 points or more on the week. We expected it to start pulling back in here. 10-year yields actually take a dive, falling about 15 basis points to 0.59. The pressure is off the short end. The 30-day had been at minus a tick. It was actually negative interest rates for a brief period of time, now trading at about 9 basis points, 9/100ths of a percentage point for the 30-day. Gold had a small downtick, about $15. Silver about unchanged, and the dollar up about 2% as that safety bid is still alive. You know, nobody knows which currencies to buy or sell in here because they're all being debased at such an incredible rate. I still contend that the U.S. is trying to be the lender of last resort and to save the world. And with all of their programs and more to come and massive printing, and I think the dollar will collapse. And I'll talk more about that later on, and we will probably see much higher gold prices, much higher real asset prices down the road. Oil gains about 18% on the week after making a low of $19.27, getting up now to about $26.60, $26.70 as we're doing this show. So that is the opening. That's my really maybe let's put it this way, scary or stern warning to you of what I think is going to happen. And I say to you, choose wisely. Follow us, subscribe, and share. That's what we want you to do. If you're watching this on YouTube, make sure you like this video. Give it a thumbs up. There's a ton of great information coming. Subscribe to this channel and share it with people. I mean, you probably want people to hear some things that I have to say or that are maybe contrary to what you're hearing elsewhere. And I think we have proven that we got ahead of the risk in here, even though we had no idea about COVID coming. So subscribe to the channel, share it. There's tons that we put on here every single week. That's free to you at this channel. Follow us on Twitter at askSlim.com. And write to Matt at askSlim.com for trial memberships. We have trials available for all levels. And right now we're even running a trial for my very unique 20 video module workshop on cycle analysis. You'll see me illustrate that moving forward. So you can just write to Matt at askSlim.com. He'll send you, let you know what all these trials are. And you can go right on the site and see everything that's included. So please do all of this that I'm saying on here right now. All right, so now we're going to get into the rest of the show. We're going to look at the best and the worst stocks for the week. I usually do this right at this time. The best and worst stocks for the week, really incredible how they just take a group and bring it out to the woodshed, or they take a group and they buy them all together on the upside. Just amazing synchronicity in the groups when they do that. The best group for the week was energies. The worst group for the week, well, it was either retail or airlines, depending what you look at, or cruise lines. I mean, they were devastating, those. Let's take a look as we switch over. And we take a look at the best stock for the week. Energy Group, as I said, had big upside movement. The Devon is a gas stock. And you can see in here the cycle analysis. Let me just bring you through what this analysis is, and you will see this just gorgeous looking chart in here with cycle analysis. The bottom is the cycle bracket, as you can see right in there. And that will give you a quick peek at how the rhythms of the market come. You should be able to just, if you learn this, you'll be able to just look at it at a glance and know the condition of the market. You see the negative cycle right in here, how it broke down under that key support and then went down through this period here. The same thing right here, almost a perfect cyclical time frame that you see there. The lengths of these cycles right in here are all very similar in length, from the low to the low to the low to the low. When they fail in resistance, they go to lower lows. And here you could see the next resistance level in Devon, around $10 on the upside. It's trading $7.80. It actually got this week up to over $9, so it's pretty reasonable to see it get up to that that $10 area. But then you can see our forecast is for lower lows, and there it traded down to 4.7, 470. Wow, that's from a $46 stock, 90% loss of its value in just these last couple of years or year and a half that you're looking at there. So this is a stock that is going to have an exceptionally hard period of time here to make any gains and hold them. We could see them easily under $4 coming out into this June-July period where we think the market will be getting slammed again. This is a good representative of the natural gas stocks. Let's just take a representative of the integrated oil stocks. Here's ConocoPhillips. You see how it looks similar? And you can see it's got bigger cycle patterns that are in there. This blue one is this ConocoPhillips. Here's your XLE. I'm going to show you some information on the XLE later. So this isn't in great synchronicity with the XLE, but both of them do to bottom right around here, and you could see the upward pop. It gets up to about $35 after trading under 21. Amazing, huge rebound as you see. This is your lower sell zone. We think anytime it pops into that zone, it's going to fail and then begin to roll over. So there's only minimal upside available in here, maybe 10-15% from where it is right now. Still, it's only 2 weeks off of the bottom. And I think that is a good stock if you're a short-term trader to look for a pullback and to buy. It's really a two-sided trade because you sell it in the sell zone and you buy it on a dip because it's way too early for this to fail in any significant way. So that's a look at Conoco, a good representative of the major integrated oils. In this category, Oxy up about 13%, Exxon up about 12%, CVX up about 11%. In the natural gas category, Hess also was up about 7%, so you get some good gains in there. And they were massively depressed stocks, so that's why you get those kind of gains. The oil drillers, this is an 18% gain in here for Halliburton. Can you imagine that? That's 18%. Look at, can you see the downward stair step in here and how the cycles absolutely scream at you? The low due right over here, the low. The low due right over here, the low. The low due here and the low. Each of these negatively configured, down, down, down to the low, down to the low, and bouncing in the early phase right over here, early rising phase. You could see right here, this was about a 5-week phase of rally that went nowhere. This is about a 4 or 5 week phase that went nowhere. This is about 4 or 5 weeks that went nowhere. And here we are in about 2 weeks of a rally with probably another few weeks that will go nowhere. Maybe $10 in Halliburton, and then probably heading back down to $4 again. So very, very weak conditions in here that we see. All energies that we saw in here were the best gainers, like 10 to 26% on the upside. I want you to watch my big picture analysis. We did that Thursday. I'm going to tell you all about the conditions of oil, energy, the monthly patterns, the weekly patterns, show you 21 different energy stocks, including solar. You all only have to be a level 2 member or higher to watch that. So, like I said, call Matt, write Matt at askSlim.com, Matt at askSlim.com, and he will get you a trial for one of those levels, and you'll be able to watch that video. Also on the upside, Caterpillar gets a bounce, CAT, and you will see that right here. Caterpillar, you can see the colored phasing in here. So sometimes we do this. It's a different way to illustrate. Here you see what we call the large harmonic family. And in there, each of these is made up of 2 smaller ones. You can see that. So the low right here made a double bottom. Beautiful, right? The low right over here, pretty much on time, and then the 2 minor cycles that make up the dominant. 1 minor cycle, 2 minor cycles. Makes a low right on time. This low right on time. This low right over here, incredibly late. And the reason for that is because of the massive move to cash, all that liquidation. People got caught, trapped in this big decline. So it took forever for this to get sold out and capitulate on the downside. And then you get the rebound. Where? Into the sell zones. Look, this tried to get to the 50% right there and then started to back off. All of our level 4 members, by the way, get these charts. live on their TOS platform, and that's our preferred broker. And our level 3 members get the static charts of these in the Slimulator ranking system. So the level 3 or 4 members have ways to get our charts like this. We're in this rally that's, again, 2 weeks old. And, you look at this one here, this screamed to the upside for 5 weeks. This was 5 weeks. This was about 4 or 5 weeks. This was about 5 to 7 weeks. So you can see there's still some upside in here, and that's why we have it projected to try to get up here to about 119. But then we think this dominant cycle pattern is going to push down into that June-July period where we think the market's going to get sold very hard. That makes this a sell zone, a shorting zone, whatever fits your style, whatever fits your personality or your own portfolio. That's why we give you this information. It's made up of our swing high, swing low analysis. We have a video for that in the cycle analysis workshop. There are 2 videos for that in tools for techs in our regular level 2 membership. So lots of ways to learn this stuff. So Caterpillar in the sell zone probably has a little bit more time, 8% gain on the week. Citi, they came out and said that this stock is a buy. And we say it's a sell. And that's where we stand. Much in contrast to a lot of analysts that may be calling some of these things that are rebounding a buy. Another one that is similar to that, that had a big rebound, is Dollar General. Interestingly, if you follow Dollar Tree, the stock is just in a horrible shape. Dollar Tree down about 10% on the week, where this stock has this huge upsurge right in here. And that's getting into this really high area of resistance up there, a big comeback after this big break, 167 down to 124, and then comes all the way back up. It speaks to people wanting to be a buyer of this one. Citigroup raises its target, and we think it's a sell. So very little opportunity to get much higher than this. This move down in the liquidation, do you think that Dollar Tree is going to do well after the buying binge that came to a lot of the retailers? Even Walmart is suffering after that. I think this is bogus, and it's getting up to an area where it is likely to be sold. Take a look at that Dollar Tree chart. It is a lot worse. So that is the best for the week. Now we're going to switch over to the worst for the week. And the worst for the week is in retail and in the airlines, really, the cruise lines. Those are what we're going to show you, but also take a little peek at Tesla that was down a little bit on the week because I thought it was an interesting chart. So the worst stock for the week in here, we switch over to Dillard's right there. And there is your Dillard's pattern. Now take a quick look at that. Tell me what you see. Should be really clear. You could see the rhythm, the money flows, when you look at the cyclical patterns. You could see the dominant ones, you could see the minor ones. They're all put in there for you very clear. And this points to a bounce. Now Dillard's gets cremated in here. 41% decline on the week. And the whole group gets killed. Kohl's down 35%, Capri down 30%, Gap Stores down 27%, and that's on top of getting killed. So it's getting killed on top of getting killed. This stock trades as low as 22.5. The upward projection in here for a rebound over the next number of weeks, it could be 2 to 6 weeks, is to get up to around $37. It's now 24. This is pretty tradable if you're a gambler and want to take a shot and say you believe that the cycle rhythms are such that anytime you get into a nested area, there's a rally, no matter how sick the stock is, and trading down, down, down. Each of those nested areas brings you about 5 to 7 weeks on the upside of some significant upside moves. This one feels like it's worth a gamble to me. If you're a short-term trader, swing trader, this should probably get some bounces in here. This is really a capitulation going on, getting pretty oversold. 41% on the week to the downside. Pretty bad. As I said, the cruise lines are getting creamed. These things are sailing nowhere except down into a basement somewhere. And this, as you could see, also running along as there's this huge liquidation capitulation going on. Cruise ships have, before even coronavirus, there's been news that we've seen now and then that people have gotten sick on these cruise ships, and they're really captive in there when that happens. And man, I love cruises. I've probably been on 8 or 9 cruises in my life. And these massive ships are just unbelievable amount of fun. Just absolutely love them. I don't want to go on one now. Nobody's going to want to go on one of these things for years. I mean, it's going to be forever. If they're going to stay in business, someone's going to have to bail them out. They don't deserve to get bailouts, just like the airlines. If you look at the airlines, I want to talk about bailouts right now since we're on the subject. Airlines right now are cutting their capacity 60 to 80%. It's going to be a long time before people are paying are flying again or cruising again. When you look at what happened to the airline charts and when you look what happened to the Carnival and other cruise line charts, it's because these companies are devastated. There's massive government bailouts that they want, and the Carnival, so a ton of these Carnival's out of Miami and RCL's out of Miami. So those they're going to claim that they should get bailed out. But when you talk about the airlines, how about the airlines did $18 billion in stock buybacks. Now they're in a 1-month crisis in the airlines, and they're broke. They didn't save for anything. They should have to. All of these companies, the airlines, the cruise lines, any of these companies, they should have to sell stock. They should have to sell bonds. I don't care if Carnival Cruise has to sell stock at $1 in order to raise the money that they have to survive. I don't care if they have to float bonds at 15 or 20% to survive. That should be the way they survive before there's any government bailouts whatsoever. Man, do I get heated about this. This is what killed us in 2008-9, the moral hazard. They should be diluting investors right now all the way down to a level that they have to raise enough money to survive. Companies have to be responsible for their own survival. Yeah, I know we have to help the people, but not the companies. They are the ones that created this, and we got to get rid of this moral hazard. At least, the flight attendants, they're smart, they're union, they're talking, they're urging no government stakes in these bailouts. And there just absolutely should not be, and there should not be anything at all. You want to borrow money from the government? First, get half of it raised by selling stock. So that's my rant for the day. Man, does that piss me off. They should not be getting money in bailouts, none of these companies. All right, so now we're going to talk about something a little bit better. How about Tesla, TSLA? This stock moves down about 4 or 5% on the week. It's up today about 4%, so in other words, it had a pretty good comeback in there as this news came out about their sales data, and the Deutsche Bank came out and said they see a first quarter profit. So what, first quarter profit? What about Q2 when nobody's buying cars whatsoever? What about Q3 when they're likely not to be doing it either? So I think that's ridiculous to be celebrating anything on these numbers. Let's see here as we look at just these two cyclical harmonic families right here. You could see the clarity in them, and that it is pretty likely, just like I say about all the rest of the market, that we're going to get a decline out here into the summertime. And we're looking for a range in here. So I like this stock for next year. I like this stock for maybe the fourth quarter. And maybe it'll start to move up before the fourth quarter. But now we see a range, 360, somewhere down around here, all the way up over here to about what is that level? 560, 580 right here. That high right there was 566. That's the range that we see it in here, and eventually moving back down here. Now, somewhere in this 350 to 400 area right here that I'm circling, that is the area sometime in June, July that it's probably investable. That's what we're looking for. So 4% down on the week, maybe not the worst, and opportunity coming, but not here, and we think that is coming later on. That is the best and the worst stocks for the week. All right, so now we're going to move over and we're going to do something a little bit different. We're going to look at our investor pulse. That's not what I want you to see right there. That's what I want you to see. I had a little news thing up there that I follow on FinViz. I look at that one all of the time. So here is the Slimulator Momentum Tracker. This is a just absolutely beautiful piece of work that we have created. Our tech guy Tom has just designed this in a beautiful way, working with Matt. And what are we looking at here? Well, we're looking at the ability to understand momentum. This is a level 1 membership. So everybody who's a premium member 1 through 4 gets this. If I want to know the momentum condition of a stock, let's just look at Apple or GM or Amazon. I just happen to have these in here. So the momentum condition of Apple, long-term, intermediate, and short-term, well, that's neutral. I actually want to more focus on the energies here in a second, but I just wanted to give you an idea. A stock like GILD, that's a stock that's been doing well because of its being in the drug business and the potential for them to be involved in a COVID cure. Look at this: long-term, intermediate, short-term, extremely bullish. You look at a stock like let's just look at Amazon, AMZN, and you can see in here, well, it's kind of neutral. It's not in bad shape, and it's short-term turning up, so not a lot of in there, and we show that as neutral. We show you it's a neutral stock. 3-month outlook in here is mixed conditions, suggest waiting because we need more market messages before we do anything. So what I want to do is I want you to see the lists in here of watch lists that we have. You can create your own watch list, and you can see in there all of the different spider select sector selects in there, and I want to focus in on energy right now because I did that special on energy yesterday, and we're going to click energy, and that's going to bring up the energy group, and you're going to see in here everything that I just showed. And see it in only the energy stocks. You can see that as I scroll, almost all of them are bearish. We had big upticks in here, and what did that do? That gave you this neutral short-term picture while most of them are still negative. Our proprietary directional bias ratio says that 96% of these stocks are still in a negative directional condition. So we've gotten bounce in the energy stocks, but man, do they have a lot of work to do in order to be able to make any kind of significant bottoms in there. So the energy stocks, a lot of them just simply got neutral in here, and overall, this particular group, while it's rebounding, well, it has a ton of work to do, and that's why we showed you sell zones in a lot of those stocks in our Thursday video, and looking today at a few of these energies, Devon, Conoco, Halliburton. Those are all coming up into periods of big resistance. Now I can scan in here. Let's just say that I want to go into scan mode for this particular watch list. And let's say I want to look for short-term bullish because I want to see which of these stocks turn bullish on the short term that may be in a little stronger condition. So I'm going to scan, and I can wait here all day because it's not going to give me anything. There are no stocks that turn bullish yet in this category. So I'm going to stop that scan. If I want to do a scan for long-term bearish in here, and I do that scan, well, it's going to give you everything because they're all long-term bearish. So you can scan in there. And the reason I'm doing this is because I want you to see that, these stocks, some of them turn neutral, but there's none of them that are in bullish condition. I'm going to scan, looking down, watch that. I'm going to turn the feed off so that it doesn't do that. And you can see as I scan all of these energy stocks, look at the directional bias, look at the outlook. They are all bearish, every single one of them. They tell you don't be chasing these energy stocks. I mean, if you're an investor that looks out 3 months, this is not the time to be doing anything significant. They're going to have to be giving you a much, much better picture, much, much more work before this sector is considered positive. So that's a look at the energies. And I'll just resume that feed right over there and stop that scan. And you can see we just have amazing things in there. Let's just give you an example of one of these stocks that might have a little bit more information on it. Let's take a look at what had a nice uptick in here. Devon was one we just spoke about, right? So take a look at Devon. We'll just open this up. And you can see, you can look at where things changed in here. And we'll take a look at the chart and see what it shows here. So this is interesting. So this is looking at our very short-term directional biases. And you can see that what happened was it turned bearish right over here. What fantastic information. And now the directional bias in here is now turning more positive. So it's looking like things are getting better in there. So like I say, none of this is turned positive on a longer term basis when we look out 3 months or so, but the directional bias for the very short term is looking a little bit better when you look at that. So I kind of wanted you to see how you could use this in here. So this is just an amazing app that we have here. So become a level 1 through 4 member and you'll be able to use this. Again, you can see all of the great stuff we have in here. And I'll just switch over to the NASDAQ right over here. And let's just take a quick peek. We'll do a little NASDAQ scan. I'm going to go to scan mode. I'm going to go to short-term bullish to see what has turned positive recently. And there you'll see Gilead, Regeneron, Citrix, NetEase, ATVI. These are just all the stocks that just now in this last recent period have turned more positive short term. You got to be careful because if something turns positive short term, you want it to look positive in other terms like you see right there in those top 3 stocks. But when you scan, if I go over here and look at the longer term and scan on it, you see like these stocks turn positive short term, but longer term, they still look really bad. So Take-Two, I mean, it had an uptick, it looking a little better, but it's still bearish right in here, slightly bearish to neutral because it's long-term bearish, intermediate neutral, and short-term bullish. So the long-term bearish is really going to weigh on stocks like this. So just a great look, I think, of what this is. I really wanted to give you that focus as we looked at the energy stocks, which have a lot more work to do before they are long-term viable. And just for the short term, they probably have a little bit of upside left in them. So that is a look at our investor pulse, focusing in on the look at the energy stocks today. All right, so now let's switch over and we're going to look at our short-term view for the coming week. When we do this, we look at the next 1 to 3 weeks out at 5 major markets: the energy market, gold market, the dollar, the bond market, and the stock market. We do that by looking at what I think is the primary future or index as a representative of that entire group. So we're going to switch over now to our daily charts and go from Tesla here to /CL. Tell you what I thought on each one. I'll tell you that the overall for our analysis last week, we're going to rate ourselves a very strong 75%. We did not get the bond market correct. That one just continues to be very strong, and we'll talk about that in a moment. The rest of them we did really quite well on. So here's light crude. We said last week that OPEC was likely to try something. There would be some news that gave it a lift, and that is what happened. So right now what we're looking for is continued attempt at upward movement, maybe to about $29 or $30 in light crude, and then beginning to roll over again. Remember, looking at 1 to 3 weeks. The sum of the evidence, just as I showed you in the energy stocks, is that it's a horrible market. Intermediate low is probably in place. We're in for some chop for some weeks or maybe even a couple months ahead. But overall, we don't see any kind of significant upside move. And as you could see, we're pointing on the short term to some further attempt there, 29 or 30, but then beginning to roll over again and move to the downside. So that's a look at the light crude market. Next thing we're going to look at is the gold market, /GC. What we had said last week about gold, and there it is right there, was that we thought that we knew there was a physical shortage going on, and there was backwardation because of the short-term shortage. We thought that it would dip and then it would rise again. We thought it would get up to 1725. It actually, that was a couple of week projection. You could see it dipped and then turned back up right into the buy zone there, and now is trading at about 1645. Question is, can it have one more bulge up in here and get close to that 17 and a quarter area? we left some space for that, as you could see, or is it going to just chop around here and come down? Overall, what we see here is a range, 1580, 17 and a quarter, over really what looks like the next 2 or 3 more weeks in here. And you can see this pattern is suggestive of a having problems in here and coming down one more time and then moving up into here and then probably rolling over one more time. So there's a lot of activity we expect in this range. Then we expect a breakout. We expect the dollar to move sharply lower, the gold market to move sharply higher, and that probably is still some weeks away, probably trading in this range that we're talking about, that area of 1580, 17 and a quarter for several more weeks before it then has an upside breakout. I would guess that the odds of an upside breakout versus a downside breakdown are just way in favor of the upside. And here, when I look at this, intermediate patterns are still very strong. The intermediate momentum has improved, actually, as it was in negative condition, and now it has rolled up to neutral to slightly positive condition. So we're looking for a breakout. First a range, and then an upside breakout. And that range probably holds up for a number of weeks. In the dollar is definitely holding up, but following the pattern as we expected. So you can see it came down into that support. Here's the dotted line is the shifted cycle that we had put in here, and we noted the shift you could see right in here. And it comes down. It's trading pretty much on the cycle rhythm that we expect, getting up into this minor resistance area. We think we had talked about it getting down to about 99 and then moving up to 101. Well, it broke under 99 in here and then has moved up close to the 101 area already. So this was the pattern we expected. It's now in resistance. We're going to still be focusing on the potential for a massive top being formed, big megaphone that you potentially see in here. And that it will then fail in here. So what we're going to look for is a test of this area in the high, 101, 101 and a half on the upside, and then begin to roll over. It's probably going to hold up for another week before it does roll. And our focus still is on this big top forming and the massive amount of printing the government's doing. They're going to print until they absolutely have a sign of inflation or the dollar in collapse. And that might not even stop them for a long period of time. So that's a look at the dollar. We expect it not to do much better than that minor resistance zone you see there over the next week and then begin to turn over. The bond market /ZB, this much stronger than we had anticipated. You see the momentum still easing up in here. The cycle low, because of the huge demand in here, the huge flight to safety was quite early, and now moving up, but resisting these. This was the sell zone right in here. This is the resistance zone right here, and we're anticipating that it's going to roll over and then move down. I am short in here, and been short now for 2 days. And looking for this to move to the downside. So still good strength that you see in here, and this upper sell zone we're guessing will begin soon to bring some sellers in. The intermediate patterns suggest a correction into May. Our level 3 and 4 people do get those weekly charts, and I show it on Future Speak on Wednesday, every single Wednesday. So that's for our premium level 2, 3, and 4 members. So you can see my longer term analysis, weekly analysis, which suggests that a decline is coming in treasuries into May once this upward movement ends and this upward momentum goes away. It's still strong, very clearly. And it's going to need some indication of some good news in the market moving up, stock market moving up, that hopefully will happen soon, and that will give these things an opportunity to decline. So now we'll talk about the stock market. Here we go as we look at these patterns. I want to just take a look here for those of you that are new. There's a lot of people coming and seeing us for the first time. What I want to do is I want to go back over here and let you see these cycles as the market was moving up. And you can see the rhythms in here as the rallies and the sell-offs were swamped. In other words, the power of this upward momentum was so strong that it continued to move up. This was a 21 days to this low, 22 days to this low, 20 days to this low, up the slim ribbon, up the slim ribbon. You don't have the slim ribbon? Well, certainly you should get it. You can get it right on our website too. For the Thinkorswim platform. So you see all this powerhouse as it just kept riding that momentum up. Then we had this tiny little shift that went on as this ended in 16 days instead of 20. You see this was 20, this was 20, this was 16 because of the huge selling capitulation. Look what happened here. After the slim ribbon turned down right here, it gave you the breakdown under that cycle low, the momentum negative. The S&Ps collapsed from that point to 1,000 points on the downside. After that, as the slim ribbon continued to warn you, the combination of the slim ribbon projection oscillator giving you a sell here, a sell here, a sell here, actually in that sell zone. So what are we looking for? If you don't understand that cycle analysis I just told you, you don't believe in these rhythms of money in and out and what it all means, well, I don't know how to tell you any more about the importance of that other than sending you to our informational page on our cycle analysis workshop. And that will help you a lot in understanding it. And they'll give you a description of our 20 video modules. 30% off on that right now while people are stuck at home. We really want to allow people to have an opportunity to use this time productively. So do take our workshop. Write Matt at askSlim.com for 30% off on the workshop. All right, so here's what we're looking at right here. This was the range that we were looking at, that we talked about. Gets up near the top of the middle right there. We said 2660. We thought it could come down here to 2470, down here to 2360, and you can see it's doing that. And when you look at the projection in here, it says that, well, you may get some rebounding and some moving in here, but then you're probably going to move down to this area of about 2360 sometime in the next week and a half. The sum of the evidence to me is that we're going to be in a range. In other words, the intermediate patterns have looking like they've bottomed. We said that last week, and we were in a temporary period of several weeks that we would see a rally and then significantly lower again. This is that range that we're looking at right here. And if you look at the cyclical patterns that you see here, it's suggestive of that range existing here all the way out into May. So we could be in a pretty wide shop in like 300 points plus in here, not getting anywhere near that low, not getting above this top of this resistance area all the way out till May, until all of a sudden we're facing the realities of how much longer this is going to take and how broken our economy is. And then the market starts to collapse again. It's already moving down again right now, but you could see as we're having this down day, and we had this down day here on Wednesday, it's really only into the center of these areas. This is not anything that's significantly negative in here. If there's anything that is, it's still in this negative momentum, and it's severe negative momentum in the intermediate. So the risk rewards are always going to be to the downside under these conditions in the midst of a time period where we're looking for a range. So range chop is what we're looking for, range chop, and then big down. So the next week or week to 3 weeks looks to us like chop around, get down to under 2,400, try to move up again to 2,700, and then be in a lot of trouble. That is it. Did I show you a lot or not? I hope that you thought that this was one of the most amazingly informative stock market reviews and analytical shows you have ever seen. I have an unbelievable team when you look at Matt and Arvi and Tom and Brian and Idea and Erica. I mean, these are the people that really help bring this to you. We really need you to support them. Become an askSlim premium member. And that is how you will continue to support them. It's how I can continue to keep bringing you this, and how our amazing team can keep creating and bringing things to you that make your trading and investing life just a little bit easier. Well, I certainly hope so. I want you to be unbelievably careful. Be so safe out there. It is so crazy. And I'm always wishing you great trading.